We're back on the YouTube with the face cam now. We've upgraded. So this video is just going to be about how I use market conditions to have 100% win rate in the past week, and I can attest that to using them to find which days not to trade and the proper protocols. Just for proof right here, shows the last week, P&L on each of the accounts and the other accounts I trade, 100% win rate. We had 3 wins, 3 break evens, 2 full-size wins, and a half-size win, which is just like a 1-to-1. That's the proof, so let's get into it. These are the 4 topics that I used. First one, no news days, bank holiday protocol. You're going to go on this amazing little program we have right here called Forex Factory. Outlines everything great. Tells us all the news. I love it. So we're going to start on the full week breakdown, then go day by day. Full week, we have half day, Thanksgiving, bank holiday. Enjoy your time. Why on Thanksgiving morning are you thinking, how can I trade on a half day on Thanksgiving on a week where the next day is a half day? Like, just take a few days off. It's okay. The markets aren't going anywhere. They actually did go somewhere for a bit, but they came back. And then Friday's another half day. Me personally, half days, I don't even look at the charts till after the day, maybe see what happened, but I don't do half days. So already coming into the week, I'm like, boom, 3-day week. So we're already expecting a bit lower volume for a 3-day week. No news Monday. Unless I see something super A+, I'm not going to take it in a week like this. So I only traded Tuesday, Wednesday this week. And then starting this week, we had Monday, we had red folder news. So we had a standard protocol for the Monday. But don't trade half days, don't trade bank holidays. Just stay away from them. Next thing is reading news to find the probable days. So we're going to go back here, and you want to trade days where there's red folder news, because red folder news brings volume. Volume brings delivery to draws on liquidity or objectives. And those are the days you want to be trading so you don't get chopped up in ranges and blow your account, and now you're sad. So what days here look like the highest? Oh, we have Tuesday. We have stacked news all throughout the day. This day's probably going to have lots of volume in it. Wednesday. Oh, we have news pre-market, so we have a pretty good day. Monday. We got some news on Monday. Let's trade it. Thursday. Oh, bank holiday. Let's not trade it. See how simple that was? Oh, this Monday. There's nothing here. It's Monday. Let's see. If it's A+, let's take it. If it's not slapping us in the face saying, please take me, let's not take it. It's actually that easy. It's simply that easy. You can literally save yourself losses by staring at this right here. You could save yourself losses just by looking at this and using somewhat of IQ. You can eliminate losses. But you know why people can't do that? Because reading this and picking which days requires patience and sitting out. And people can't sit on their hands and not trade for a day. That's why you have people opening the charts on Sunday night open and smacking orders. They just can't be patient. They just can't be patient. Next topic is range volume, volatility injections. So that's when you got to go just here. It's the price to see it. So volatility injections, what I mean by that for this topic is market open. So we're just going to go on the 1 minute for that. What happens at market open? The first 5 minutes of market open, what are the candles? Let's look at this day. 70 points, 1 minute candles, created a 70-point range, and we were having 30-point, 40-point, 1 minute candles. So we can expect lots of volume. And what happened this day? We went 200 points down and 500 points up. So right in the first 5 minutes, you could have decided, are we going to have some good volume today and we could potentially look for a trade. Then let's go to Wednesday. Market opened here. What do we have here? We have 1 minute candles that are 30 to 50 points. We could see something today. And what did you have? 100 points down, manipulation leg, and we distributed 250 points up. Right at the start, you could have seen right there. It's actually that easy. It's actually that easy. If this, then this. If we have volatility at the start, then we could have a good day and I can look for trades. If we do nothing at the start, then I wait till we pick up volume and then I look for trades. All you have to do, and it will literally save you from getting stuck in some bullshit, which we're going to look at right now on Thanksgiving, when people thought, yes, let's trade. What did we have here? Market opened here. Like, the market opened and gave us like 8 points. And you thought, yeah, I'm going to trade. Be so for real. And look what the market did that day. We literally had a 30-point range all day when days I just showed had 30 points in 1 minute. So right there just shows you, looking at what happens at volume injections into the market, and when institutions start placing orders, that's when you can start looking for positions and draws and entering trades. But a lot of people can't do that because they're not patient and they want to trade every single day, of every single week, of every single month, of the entire year. And those people will always be unprofitable and have zero payouts. But someone has to keep prop firms in business. Our payouts have to get funded. Someone has to fail for my payout to hit my bank account. So, I mean, it's okay. That is what I mean by range volume and volume injections. So, overall ranges, you want to be in New York session, trading like 200 to 300 point ranges. Even Monday had something nice. You don't want to be trading this absolute dookie. That's a bit more advanced, but I mean, it's pretty simple if you just look at what's the range, how many points of volume did market open bring, and a lot of times that can determine which day is going to be an absolute barcode of a day. Another like slight thing you can see with that is if we get a whole bunch of volume in market open, like we displace like 50, 60, 70, 80 points, and then we start only doing like 20, 10 points, like 10, 20 points, then that could also be like all the volume's already gone, it's already used, and that's where you wait for us to pick up and start displacing more. Volume and volatility has a direct correlation with displacement. But that's a video for another day. The last topic is basic higher time frame trend and narrative. This is going to be like a quick basics of it. So we're here on the 1 hour. Low here gets swept. Let me make this bigger for this. Low here gets swept. These three like relatively stacked lows here. What happens to them? They get swept. So when this gets swept here, right? The next target, oh my god. The next target is here and then down here. So if you were to get here, what you would want to see is this rebalance here. You want to see us make new lows and start displacing. The fact that we accumulate once we sleep these like higher time frame external draws basically shows me we're probably not going to go lower. So when you open up the charts and you look at what's the higher time frame doing, Well, we have our bearish draws, right? And we have our bullish draws. So what are we displacing towards? What happens on Monday? Come to this new week opening gap, we go up, and we break a high right here. What do? We rip through that high. We absolutely just fist it. And then we rebalance to 0.5. We come up. What do? Oh, we break this high right here. Oh, we broke another high. So I guess we could be looking for uptrend now, since we've been breaking highs, rebalancing, then breaking highs. When you want to look for shorts is if we come here, close down in here, and then make a new low. And then that's when you want to start targeting here and these lows. But no, we come break another high. So once we are up here, you want to be looking for this. What's a higher probability when you're up here? That we come up here, or we come back down to here? You can even look at the imbalances. React off this one. We react off this one. We break a new high, and using it as support now, and my guess is we go up here. So that is just such a basic way to just use the higher time frame trend to figure out basic market conditions. What are we doing here? We're doing nothing. We are not breaking highs or lows. So you don't really want to be in that. You want to be in here. We're breaking highs and breaking lows. Even down here, this is not probable. You don't want to be trading this because we're just accumulating, we're not trending. So that's another basic. I'll do a more in-depth video on that topic eventually, but those are just the 4 things that I use for market conditions and how I had, I'd say, a pretty good win rate in the past week.